I would like to call Jérémy Pellet, Deputy CEO of the Agence Française de Développement, who will be the moderator of this roundtable number 2, dedicated to Africa and emerging markets. Jérémy, let you call the participants of your session.
Hello everyone, let me please introduce, you're not all there, but Julia, if you... So let me please introduce Julia Prescott, who is the Chief Strategy Officer of Meridiam. Jean-Jacques Barberis, who is the co-head of institutional client coverage at Amundi. Bruno Bensasson, who is the CEO of Energy Africa. Jean-Patrick Marquet, who's the MD Head of Infrastructure at EBRD. Gregory Ness, who's the Executive Director for Project and Export Finance in Africa for Standard Chartered. And Hamid Taoufiki, who is the CEO of CDG Capital. As we all know, infrastructures are an essential part of growth and development in emerging countries. The current needs for essential services on energy, on transport, on water and sanitation, on agriculture, on digital are huge. Only 35% of the population in sub-Saharan Africa has currently access to electricity. I won't bother you with too many data, but just to have the big picture, to remember that currently we had last year $62 billion of financing for infrastructures in Africa, which is actually quite a stable number for the last 7 years, even slightly decreasing in 2016, whereas the current needs would probably require twice as much as money as what is currently available. The other thing we need to keep in mind is that the fact that given the current level of local savings in those countries, international investors and international investments are desperately needed. And that's the object of this roundtable today. What role should investor play in that regard? For development banks, there are a few roles that we can play. First of all, direct financing, of course. At Agence Française de Développement, we dedicate about 4 billion euros of investment in developing and emerging markets every year. And we can also try to leverage local investment through helping a direct access to finance for sub-sovereign players like municipalities, or try to leverage private instruments through de-risking guarantees or support green or project bond issues. And last but not least, our role is also to ensure a sustainability of the sectoral governance of these infrastructures in terms of operation and maintenance. So the question today, I would say the provocative question is really the money the topic? And what kind of money is needed, and what kind of money are we talking about? Do we need public money? Do we need private money? For what projects? So I'll start by a question on the specificities of infrastructure financing in emerging countries. And I'll ask Bruno Bensasson, Jean-Patrick Marquet, and Gregory Ness to give their views on this issue. Who wants to start? Bruno, maybe?
I will start. So I am Bruno Bensasson. I am the head of NG for Africa, where we developed a mix of activities, namely power production, services, energy services to industry, corporates, or households, and eventually decentralized solutions for more rural zones. So to answer your question, specificities of infrastructure, first perhaps there are essential needs, not only normal goods, but essential goods and services, so they come first in development. Second point, at least for energy, but I believe it's most of infrastructure, they are long-term, so they are long-term investment. And of course, in an environment which is risky or perceived as risky, the longer it takes for the capital to be reimbursed, the more difficult the financing can be. And last, I would say, a good part of them are, from an economic perspective, public good, which does not prevent to organize private-public partnership, but often they have to be financed by public bodies, which, at least for Africa, have not a lot of money when you consider tax on formal economy. However, if you go for energy, and I wish I will finish like that, a little bit like telecom, energy is an essential good, is an infrastructure, useful for social and economic development, not only useful, necessary, but it can be considered as quite a private good, because people can be invoiced for that. And you see more and more the development of decentralized solutions where people pay the cost of their power. I will finish with that.
Thank you. Jean-Patrick?
So Jean-Patrick Marquet, I'm the Managing Director for Infrastructure at the EBRD. Africa, we have some countries in Africa, but the vast majority of our countries of operations are in Eastern Europe, Central Asia, and right around the Mediterranean. What I found very interesting in the previous panel was the conclusion, which was essentially that the money is not the problem. The problem is that there are not enough projects to invest in and to finance. And effectively, in emerging markets, it's the same issue, just square or cube. You have much bigger needs than in advanced economies, and the ability to put together projects that can be investable is much weaker. And we see two kind of pitfalls, too slow or too quick. We see many investments where the governments are moving at snail's pace, agonizing over every little decision, to the point that those projects become sometimes irrelevant by the time the decision can be made, or you've had a change of administration, change of majority, change of regime, and of course the first decision of the new guys is to say that what the previous guys were doing made no sense. First pitfall. The second pitfall is too quick, where you have a high-ranking policymaker who wants certain projects to take place, and everyone is rushing to bring them to market or to finance, and you have half-cooked projects which effectively no one wants to invest in, and so you are wasting time rather than be more efficient. So it all boils down to preparing the projects to the right standards within the right time frame. And there is a big bottleneck. The capacity is often not there. You don't have the tools, you don't have the people. you don't have the time to do it. And that's where international institutions like us, or like the G20 or the World Bank can play a very important role. We have put together what we call project preparation facilities, which effectively are technical assistance facilities that provide free services to governments to prepare the projects, whether to be publicly financed or organized through a PPP. At EBRD, our shareholders have taken 40 million out of our profits. We are a profitable institution, so they effectively reserved 40 million euro to put into a dedicated project preparation facility. And with that facility, we offer to our clients to finance the studies, to finance consultants, to finance advisory, to ourselves help the supervision, and therefore make it much easier for those clients to effectively bring projects to a stage where they can be invested in and financed. So I will leave it there. I think it's a very important hurdle that we all face. It's the first and foremost of all the hurdles, and clearly the main theme that I believe in emerging markets we need to address.
Thanks very much, Gregory. Standard Chartered has a long experience in emerging countries in Africa. So what's your...
That's right. We're in 15 countries, wholesale, and in many cases retail, but we follow clients throughout Africa. So we have a project and export finance business specifically for Africa, and that's sub-Saharan Africa. So we do North Africa, but much less than really the middle band of Africa, if you wish. I think from our point of view, there are many, many risks and perceived risks from externally going into Africa, but I think the local presence is quite important for developers. We've seen a wave of funds or developers backed by funds coming into Africa in the last 2 years, and a lot of them have, learned somewhat the hard way that you need to have JVs with local partners. You need to be really entrenched locally and understand the political will, the players, the parastatals, how the whole system works effectively. I think the other point is every transaction seems to be, on a project financing side, tends to be, we're developing new documentation, we're developing new regimes for PPP programs, for legislation, concession agreements. A lot of this can be taken away back from the markets of Europe or the Americas or other African countries where there has been many successful projects, but we don't see a lot of replication of those project agreements just as a copy-paste into other markets. There are specificities, obviously, of each market, but there needs to be much more of this, of a replication of the risk allocation. The other thing very important for projects is multilateral support and World Bank support that we see in all these projects, not just for the halo effect that can have in terms of they have cross-default regimes into these governments, and you're assured that they will bind by the law in terms of payment regimes, et cetera, or bind by the concession agreements. But also just in terms of the different guarantees you can get. There's a lot of different products multilaterals have come out with in the last 2 years, the DFIs. The World Bank is working actively on many different products. As we speak last week, they had the World Bank meetings, and there's a lot of talk about how they can mitigate risk, for example, convertibility, a specific product for that, for example. So that's very important. Multilateral involvement. And then the last thing I would just say is that, financing historically has happened a lot and still does, not just through projects, but obviously through bonds, where specific amounts of bonds are used for infrastructure projects, like in Zambia, for example, like in Senegal, like in states in Nigeria, for example, but also in terms of corporate funding. So we do a lot more corporate funding as opposed to project financing, just because of the difficulties, obviously, in getting these projects going. Last thing, I'll just add in one last thing. I think there has to be a lot of recognition for the developers and the time they spend developing these projects. They think they're going to spend a year, 2 years. They end up spending 5 or 6 or 7. They think they'll spend $2 million, they spend 20. And there's recognition in the financing that you can get development fees, and there's a more of a standard approach now that you get recognized for that, so the returns can be quite sizable for developers, and that's something that's quite important for developers to be always attracted into these markets.
And do you think, maybe Julia or Jean-Jacques or Rami, do you think that the investment needs are well covered currently by investors? And if you could answer by yes or no, and then explain in a couple of words why. Julia.
Yeah, well, I'm not going to say yes, I'm going to answer because you're going to get the wrong impression. I'm going to say that no, I don't believe that all investment needs are covered in terms of the investment requirements for infrastructure in Africa. There are so many figures kicking about, and we've already talked about the need for private investment. The one figure I'll put into the thinking is that BCG reckons there's around 12.5 billion required for private investment on an annual basis in infrastructure in Africa. And I'd like to compare that with the fact that over the last 10 years, only 4.5 billion has been raised for equity, 24 equity funds in Africa. So if you look at it from the private sector equity side of things, there is a clear gap in need. And we've talked a little bit as well about how that gap has been created, that it's not just a financial gap, it's a gap to do with capacity building, it's a gap to do with transactions that are actually being delivered and executed. And again, linking that as to the type of equity and the type of people that are putting or fulfilling the identified investment needs. In order to get a project, finance a project across the line, you not only need money, but you also need a very strong sense of how that project is going to be molded, supported through its journey from the development to the investment to the operation maintenance period. And I think certainly as a fund, Meridiam is particularly focused on that journey through investment, and really feels that more holistic approach fulfills the investment needs, not only through just the governance side of things, but also the key environmental and social aspects that go into fulfilling investment needs in Africa. And so the answer to the question is no. The answer to the question is changes are being made, partial fulfillment and consideration of investment needs. But it would be good to get a similar approach being taken across the board by investors going forwards. If I could add another way, perhaps, in which investment needs are being taken into account, we haven't actually used the blended finance words yet, because I think this is a change not only in investment approach, but also in linking together sources of public and private money going forwards. We've seen blended finance already with our friends in the EBRD in Turkey being successfully achieved, but we're also seeing blended finance through the MCPP facility that the IFC has promoted together with Allianz, who have also been a trailblazer in taking that blended finance approach. So no, things are getting better, ideas are getting better, and hopefully more funding is coming in as well.
Thank you. Jean-Jacques?
Yeah, no, thank you very much. I think I agree with a lot of what has been said, and my direct answer, are the investors' need covered at the moment? My answer would be no. And at the same time, my answer to your initial question, is the money there? My answer would be yes. So definitely there is a mismatch to be addressed. So maybe trying to give you, I would say, a global asset management manager perspective. At Amundi, we manage a little more than $1.5 trillion US. And 80% of that is for institutional investors. So we roughly have, I would say, a global view of what are the institutional investors' needs and demands. We serve a little more than 2,000 worldwide. And I think there is something to be said. If we look at what is the total amount of AUM owned by these long-term institutional investors worldwide, we're talking about something which is like 100 trillion. So that gives you the order of magnitude of the potential flows that can be generated. But at the same time, it is quite clear for me that out of this 100 trillion, it's a minority part of it that will go directly to project financing. So the question that we have as Amundi is that as we are mostly, I would say, a public market investor, despite the fact that we have developed our infrastructure franchise also, is, for me, the true question is how do you create the proper asset classes that can help institutional investors to invest maybe the traditional way they do to channel money into infrastructure projects. And for me, that's really the key challenge, because I don't think it's true to say that we're going to see huge increase in trillions in direct project financing. I think what we need to create are really the channels that may make possible for these investors to finance or refinance infrastructure projects in emerging countries in particular. And at least that's one of the challenges I see and one of the bottlenecks we have in front of us at the moment.
Thank you, Jacques. Amit, maybe you want to add something?
Yeah, Amit Tofiki, CEO, CDG Capital. CDG Capital, in fact, is the investment banking and investment management arm of Caisse de dépôt de gestion in Morocco. So I want just to bring something from a view, local view from investor, in fact, and how the institutional investor are trying, in fact, to invest in this asset class. So the answer to the question is no. But I'm optimistic that it will be developed very quickly. Why? So we said before what are the main specificity of emerging markets or in Africa. I think I would highlight one point which is important, which is the case for other emerging markets, is that the omnipresence of MDBs and regional development bank, which is, I think, very important, and which something which is, I think, has to evolve according to the development of each countries. And in order to be able, for example, to succeed in blending, in fact, finance, we have to have kind of catalytic approach of the development bank and to be able to bring in local investor, local commercial bank to come into the project. I give you just an idea about, for example, in Morocco. We are managing the biggest pension fund, in fact, in Morocco. For the time being, everything is almost invested 80%, in fact, in local treasury bonds, and a portion of it, 15-17%, in fact, in the equity market. But we are now discussing with the regulator and with the Ministry of Finance in order to enable, in fact, local pension fund to have the possibility to invest, in fact, in infrastructure. We set up 6 years ago a fund dedicated to infrastructure whereby you can invest, in fact, in equity. And I agree that as it is something new, it took time to close deals. But I think we learn from this experience, and also the people involved, that we have, in fact, to adapt a skill and also the governance in order to be able to respond to the need of private investor. But I think what is important going forward is really, and this is one of our objectives locally as an investment bank, working closely, in fact, we are also considered as a national development bank, and I think this is something where National Development Bank can play the role of structuring deal together, maybe with some regional banks, in order to enable to attract pension fund money, insurance fund money locally. And I think when we succeed by doing this, it will be much easier, in fact, to attract foreign investors. Another point regarding the specificity of the African market, which is linked to what I've said before, which is the importance of MDB financing and regional development bank financing, is that a lot of infrastructure are financed in hard currency. And this is something which is important to have in mind. Is we have a risk which is now increasing a lot, and we have to think on how we can. There is no way to manage this type of risk as of today with the instrument we have, but it will be, I think, important for regional development bank or MDB to help some of the the country, in fact, to develop their local capital markets, because to be able to have a sustainable infrastructure financing in Africa or in some country in Africa, it has to be rooted in the local capital market.
Thank you, Bruno.
To add on your question, are needs covered? Obviously, no. I must remind that Africa has the same power capacity as Germany, 190 gigawatts, 2/3 of the consumption being in the Republic of South Africa and the region of Northern Africa, which leaves the consumption of the other 800 million people at the level of Poland. So no, the needs are not covered. And I would add that only 30% of sub-Saharan Africa has power, so 600 million people without power. And if we don't change the situation, there will be 1.5 billion by 2050. Nevertheless, I would say that there are some reason to hope. One being the example and catalyst of the telecom sector. When you bring some good technological solutions to people, they adopt them and sometimes quickly. The second, I would say, good news is that the cost of energy and especially of decentralized energy solution is getting lower, sometimes drastically if you take solar. And of course, in some African geographies, because they are very diverse, when the density is low, to have low-cost decentralized solutions is good and even necessary. And the last point is that there are, on the continent, excellent regulations. If you take Morocco, to a certain extent, South Africa, if you look at how Kenya deals with foreign exchange risk, they are a very good example. You don't need to go across the world to find good regulation. And when you find good regulation, especially cost-effective tariffs, then you find good projects and good people to finance them. Unfortunately, those good regulations, they don't spread as quickly as African countries would need. But certainly for centralized and decentralized solutions, if you look carefully, you will find good regulations. I hope that with their spreading, we'll be able to profitably electrify the full continent far before 2040.
If I can just add to that in relation to investment needs, I think one of the things that hadn't been mentioned was in relation to the procurement processes. And I think that that's one of the bugbears in terms of fulfilling those needs. And it seems to me that one of the best examples of those is actually what was seen in South Africa with the REI PPP solar project, which attracted nearly 6 gigawatts of new solar, of around 14 billion of investment, over half of which was actually FDI investment. And there are certain aspects of that that can be rolled out into other markets in terms of replicability, similar documentation, similar evaluation processes. And it seems to me that as well as getting money, providing energy, we also need to make sure that procurement processes are such that people can, with of course their own national concerns being factored in that, but they can actually give a good, solid pipeline of projects that investment can be made in.
Yeah.
If I may get back to the question of whether investment needs are met, I would say effectively today those needs are met because there are not so many projects to finance. So the few projects that are investable, they find finance. They find a few adventurous investors. You always have the multilaterals, you have some export credit agencies, and a few international banks that are ready to finance. The problem will be once those countries get their act together and bring many more projects to the market, that's where the issue will be. And those existing players will not have the capacity to step up as needed. And it's not with the new US administration that the World Bank will get a massive capital increase to expand its lending. So we have a real issue there. And Julia, hinted at the fact that we need to do much more blending, and that's clearly the way to go in the medium term. And an example that we have together with Meridiam is the case of a hospital PPP in Turkey, where we have managed together to attract bond investors into a greenfield project finance type structure in an emerging market, where effectively EBRD provided some liquidity facilities to credit enhance the bond, and MIGA signed a political risk insurance to also make it investable for investors. So it's this kind of scheme where you can effectively mobilize investors that would probably not look at this market, this type of project, this type of maturity without the added benefit of a risk mitigation scheme. So medium term, that's probably the way to go.
But can I just take issue with the yes, there is money available for the projects that are out there. And I'm quoting from a survey that was done by DBSA, Development Bank of Southern Africa, as part of their overview of what the real issues were in the African market, which was done, and I apologize, I'm not giving you the acronym, so it takes slightly longer, the Sustainable Development Investment Programme, which is supported by the OECD and WEF and many others. Now, they, in their survey, which they looked across a whole series of different projects across Southern and Eastern Africa, again, it came up and up. The issue was the availability of capital, exchange rate risk, cost of capital, and counterparty credit risk in that order. So whilst, yes, if a project comes along, it's high profile enough and something gets cobbled together, then possibly projects will get done. But certainly, projects that are underway and in development in the marketplace are still citing the availability of capital as being their main challenge. And I think that that's something that by using blended processes, by using methods to actually assist project and project sponsors to get across the line is still the key criteria going forwards.
So we've been talking about preparing projects, the gap in equity, the need for diversification of sources, the need to mobilize local finance. Maybe a last question for you all. What initiatives do you think will definitely be needed in your dreams? What would be the thing you would like to see that will be a real catalyst for financing infrastructures in developing markets? Jean-Jacques, you want to start?
Yeah, I don't know if it's a dream, but at least I can echo one example. I think I fully share the view that basically the development of blended finance is a promising avenue. And so in that respect, there is an initiative we've been part of with the IFC, so the subsidy of the World Bank. And the idea was quite simple. The idea was to say, after emerging countries took strong commitments at COP21, there will be massive needs of financing green transition of emerging economies. To channel the institutional investors' money there is an asset class that should be kicked off, let's say. It's the green bond market in emerging countries, which is a market that doesn't really exist anymore. At the moment, it doesn't exist for real. You've got 168 billion green bonds in the world, and 90% of them are located in developed countries. So developing that asset class is a way to channel institutional investors' money in financing or refinancing projects that could be infrastructure, for instance, in emerging countries. And to do that, to meet the challenge, what the IFC has decided to do was to address both the supply and demand question by setting up a fund that we're part of, where basically the IFC plays the role of the first loss taker. So basically what they do, they are the single investor in the junior tranche. And afterwards, it's our job to find institutional investors to meet a 2 billion target fund that will invest into green bond issued in emerging countries. That will directly or indirectly finance or refinance projects in emerging countries. This is only an example, but it's an example of development of an asset class where institutional investors can easily get in. So I think this type of approach, apart from all the programs that are run by the MDBs on project financing, is a very promising avenue. And I think this probably could be duplicated in the future in the field of we're talking about.
Thank you and good luck. And as we will take part of the mezzanine, I really hope that you'll manage to get a real success in your fund. Julia.
Well, I'm delighted to say that it's always, in fact, the bond that we were just talking about in Turkey was a green bond, and it's always our intention to, as far as, which is one of your 10%, I think, in the emerging markets, and it's always our intention to structure bonds that have that or structure financings that have that very much green and very strong ESG elements to them. What would I really want to see and support? That is that a fund and institutional support to assist in capacity building in a number of the emerging markets, to make sure that information is readily available, that support is given in terms of structuring projects to get them to financial close. And I think that's going to be a really, and also beyond, I think, to assist in both the construction and operation maintenance periods going forward. I think that's a really critical part of ensuring that more infrastructure, and particularly greenfield infrastructure, where the need is greatest, is developed in the emerging markets. Lots of blended finance as well, but that would be my first wish.
Thank you.
I mean, for me, the big focus is always at project preparation and financial close. But fundamentally, the long-term challenge is how those projects will be monitored, the contracts will be implemented, and effectively investors will get their return and the banks their money back over the 20 years that follow all of that. And that's clearly where we will be able to say whether things have matured or have not. And it still remains to be seen in many emerging countries whether those projects will be managed by the public side in a reasonable and constructive way in accordance with the contract and the rule of law, or whether there will be political turbulences that will make projects effectively extremely difficult post-completion. So my wish is that we see emerging that capacity within governments to effectively properly monitor and support those projects as they operate.
Thank you, Bruno.
I think we face a misunderstanding in a certain way in certain countries between the public accounting and private accounting. From a public perspective, the question is, do I have the money before the project to finance it, to pay for the equipment? From a private perspective, the thing is very different. Shall I get my cash flow back on 10, 20, 30 years to get the decent profitability or the decent likelihood of a decent profitability? So my first wish is that those two worlds, public and private, African and European, talk more to understand each other better. Based on that, the second wish is that good regulation spread, and especially cost-reflective tariff spread for the benefit not on investor but of African economies and African people. Because as long as I tell you that my price do not cover my cost, you won't invest in my project, you can blend it as you want, there will be always a missing money and a lack of investment. So I would say that the first thing is to set up this thing that does not prevent countries to do some clever social policy between richer and poorer households, between industry and households. All that is possible, but if you don't admit that a good has to get a price close to its cost or at the level of the cost, no one will produce the good, and there will be a lack. Once that is done, and I think that comes first, then you can imagine blended assets. You can also imagine guarantees, but guarantees, if you have not prevent this moral hazard, they will be too expensive, they will be subsidies and not guarantees. So I welcome guarantees, but they'd have to be, I would say, political give and take, where you give the guarantee, but on one side you reduce the moral hazard on the other side. And the last wish, if you allow me, is that those structured class of asset concern not only large infrastructure, but also bundles of small or very small infrastructures, such as microgrids and solar home systems, because the technology is such that in the past we were doing some big plans for 1,000 megawatts or 10 megawatts. Now the microgrids are 1,000 times lower kilowatts, and the solar home systems are again 1,000 times lower watts or tens of watts. So we will bundle them, but thank you, investors, to also accept a kind of new assets with a kind of B2C consumption credit risk. I don't think it will be bigger risk than the traditional regulatory risk, but it will be a sum of very small stuff that you will have to look at, please, too.
Thank you, Gregory.
So from a lender perspective, I think I and many of my colleagues would have three wishes. One is, there was a discussion on the previous panel about all the regulations coming for bank balance sheets in terms of Basel, IFRS 9, things like that, which there's a lot of debate amongst commercial banks or within commercial banks about the treatment for these, which is a bit more detrimental than positive, to be honest, at the moment. So if that regulation could move positively in the right direction, I know that's a very much a wish list from our senior management in the bank. The second point is, and also it involves other products as well. For example, MIGA that we mentioned, banks don't get risk transfer for MIGA. So for us, we have the same pricing if it's MIGA or no MIGA, even though that is a substantial risk that's being covered with MIGA, for example. And most banks are like that. So there has to be a treatment of these products in a positive manner. The second bit is local financing. We talked about, there was mention about that. That's a very important point, not to use hard currency for every deal. There are now solutions for 20 years plus local financing, which have been banked now with the help of the World Bank. So there are solutions which include refinancings in base cases, but there needs a bit of political will as well from the governments to support that. And the last bit of my wish list would be just amongst the DFI community, where that's the first lender of resort for many of these projects. We need a better syndicated model with DFIs, as in if you appoint 1 or 2 MLAs, lead arrangers, we need to have it so that we're not discussing a term sheet for 2 years with 5 people from each institution times 15. It just takes forever basically. So you extend the timeline of discussion by at least a year on a term sheet, just because we don't have a better syndicated model, not just within DFIs, but also with the banks. It's a club basis. We know these are very difficult deals, but there needs to be a bit more of leadership with lead arrangers.
Thank you, and point taken. Hamid?
I was thinking, in fact, of what happened, I think, since last year. You have to aim for the impossible to make it happen. So I will try to make a wish. Is the following, in fact, is seeing the mutation or transmutation of MDBs and National Development Bank into MDIB or NDIB, i.e. Multilateral Development Investment Bank, acting in fact, not only through the balance sheet and taking the size of the balance sheet as a measure of the impact they have on the country. I think this will make a change, and we'll have this initiative that were discussed here and there being a second nature of the way National Bank act, and I think it will be an accelerator in order to make this blending, this wedding of odd couple between the public money and private money, something which is natural.
Thanks a lot. So, well, to end up on a positive note, I see that you have dreams, but also solutions, and that at the end of the day, things are moving in terms of innovation, in terms of reducing moral hazard, in terms of mobilizing local financing, improving capacity building, and maybe simplification of the work of the financial institutions. So that's all positive, and hope that effectively, accompanied by a good regulatory movement, we could improve the situation for the financing of infrastructures in emerging markets. Maybe there's time for a couple of questions in the room. Does anyone want to add something? Yes?
Good afternoon. I am Stéphanie Capdeville from the Green Climate Fund. As several institutions here are accredited to the Green Climate Fund, so I would like them to express their wishes as well, or their experience, especially as we are just at the edge of the COP23.
So does anyone want to develop on their experience with the GCF, or everything's fine?
Well, it's effectively starting, but and things still need to get into place. But I think the very positive element is that everyone realizes how critical this is. The COP commitments are now part of the strategies, effectively, of all the institutions. At EBRD, we have decided to increase the share of our investments going to climate topics towards 40%, and we are actually getting pretty close already to the target. The positive things is that, you know, the realization is now widespread that this is the top priority. And we will all try to draw on resources like the Green Climate Fund to make it happen.
We just been accredited, in fact, in July. It was a long process, 600 documents in 2 languages. So we started, in fact, working seriously on project and trying to do what I just described, in fact, the blending finance using in GCF, and also the fact that we can have long-dated maturity, and also taking a different risk or accepting the lower IRR, and showing that we can finance a project by having a different type of risk allocated to different type of investor. And I think this will be a very good opportunity, and I hope that we can close a project very soon. Thank you.
Thank you. Last question?
I'll take advantage of that. Jacques Calou from the IMF. So thank you very much. Yeah, there's a lot of capacity building going on upstream on preparing projects. Someone mentioned that there is need to monitor projects and make sure that funding flows back. So whose role is that? Should it be development finance institutions or some other initiative?
Well, I mean, perhaps if I could respond to that. I think that as projects are developed and built and then operated over the long term, they are usually structured on the basis of contracts. And those contracts clearly set out how the relationship should develop. Now, those contracts both have public, usually, and private sector engagement. And they should be the underlying basis on which the relationship works going forwards. And to a very large extent, I think that this has been the practice and it has been carried out in that way. So that rather having a supranational institution coming and looking down, perhaps it's really up to both public and private parties to carry out their duties in the way that they've agreed to do that.
If I can add on this one, ENGIE as, I would say, a very international company, always partner with local actors. We are both developer, financer, and operator. So contrary to some developers that go and leave and you wonder, is it a good project or not? We partner, but we keep some, I would say, skin in the game. So that should be a good sign that the risk of the project has been considered and that the operation and maintenance will be done. And I would say the financial close is really the moment of truth, where people gather around a project and wonder if on the long term or not, the cash will, I would say, gives a sounded IRR to the project. So I would say that the commitment of the shareholders under the survey of the lenders could be considered as enough, at least in our model where the developer and the financer and the operator is the same, so with no diverging interest. However, on the long term, there will be no sustainable energy development without a good payback, and that means cost-reflective tariff. And for that, it's more, I would say, a public-private dialogue that any survey that will allow for that.
Thank you very much. So let's end here. And I'd like to thank all the panelists for today.
Well, thank you to all of you. Very interesting session once again. And for me, a key figure given by Bruno Bensasson concerning the needs, the importance of the needs, and mainly in the African countries, and the way the projects must be developed, and all the questions concerning the way and the type of instruments and structures which can be mobilized. I would like now to invite Thierry Déhaut, founding partner and CEO of Meridiam. Meridiam is a very active market player here in Paris in the infrastructure financing as an investor, institutional investor. And Thierry knows very well the emerging countries and mostly Africa. And I think that it could be the occasion for you to ask him questions on experience concerning the South countries. Meridiam is also a strong partner of the organization of this event. Thank you very much, Thierry, who has been at the initiative also with us to organize this event. The floor is yours.
So I thought it was a good time to actually have a short movie, but I'm not quite sure how I should deal with the technology here. Could we have the short movie? Or you'll have to listen to me otherwise. Why is capacity building important in infrastructure? Is because it's the biggest obstacle to the development of infrastructure investment and infrastructure development itself. It is that in the countries and communities that is lacking the most to allow those communities to develop, because they lack the intellectual expertise to actually be able to build complex projects.
L'école des ponts ParisTech forme les meilleurs ingénieurs qui construiront les mondes de demain. L'école développe un panel de formation en restant à l'écoute des besoins des entreprises et en s'appuyant sur l'excellence de la recherche, en particulier celle qui est mondialement connue, qui est celle du génie civil, mais l'ensemble de la qualité des chercheurs de ces laboratoires.
Meridiam has partnered with École des Ponts et Chaussées because they have 300 years of more of expertise in the development of infrastructure, of building countries and building the future.
L'école des ponts ParisTech a développé de nombreux partenariats avec les entreprises. L'exemple de Meridiam est illustratif de ces partenariats. L'idéal pour l'école et je crois aussi pour l'entreprise, c'est d'inscrire ces partenariats dans une perspective pluriannuelle à travers des chaires d'enseignement et de recherche qui combinent l'ensemble des atouts et de l'école et de l'entreprise. Et lorsqu'on parle de développement durable, on ne doit pas oublier la dimension soutenabilité financière. Et c'est la raison pour laquelle nous avons souhaité développer un master spécialisé dans le domaine du financement de projets d'infrastructure.
I wanted to strengthen my knowledge and all what I learned during my internship. So I chosen this master, and there is nowhere better than doing that than the École des Ponts.
The training was made by high-profile professionals from many sectors and many subjects, and thanks to the timetable of the master, we were able to work at the same time, so I was able to improve my skills both professionally and academically. The reason I want to work in the project finance field is because I always wanted to work on meaningful projects.
I want to leave a footprint in this world.
What I would like to do would be inventing new structure, new strategies in order to continue the financing of those infrastructure while decreasing the involvement of public subsidies.
I want to help to make people's life better and easier by doing large infrastructure projects and to align investors and local communities' interests.
Good afternoon. And first, I should congratulate Frank Bénard for his, I'm not sure he's in the room, his award. But a few words really to talk about the development of human capital. I think we talk a lot about this, and I think it requires a specific focus because it is not project preparation facility. It is not, but it's about the people around the projects, both in the public and private sector, that are actually able to develop infrastructure. And clearly, it is a complementary aspect of human capital development to some of the facilities that EBRD was, Jean-Patrick was talking about. That works beautifully, but it does need a project manager on the public side to actually be able to mobilize this type of facilities. Perhaps just 2 points on this human capital development. I think the first one is really developing the experts to be able to support infrastructure development, and for many reasons. I think all the practitioners in the room do know that without a strong public sector with an ability to actually drive project and create a pipeline, there won't be any infrastructure investment. And I think we do say that, and I think we've been saying that for many, many years, but it's been the biggest obstacle to investment in infrastructure has been the procurement of infrastructure projects. I actually spend some of my spare time at the investment committee of a European Fund for Strategic Investment, and in the early months, we spent quite a lot of time sort of waiting for projects rather than being able to invest, and that was a huge plan of 300 billion that was planned at the Commission. So it is quite important for pipeline. It's also quite important for the risk management skills that are required for investors to manage for investment, but also for the public sector to be able to negotiate and really get the best deal that they can in terms of having the delivery of these projects over the long term. The last point, we've talked a lot about blended finance, a lot about climate finance. These are fairly innovative features of financing that clearly requires expertise and development from the practitioners of infrastructure on both sides. Blended finance does take the development bank world and the public sector world, and on the other side, the private sector. So that's the reason why over the past 5 years, we've actually partnered with the École des Ponts. Incidentally, I did hear from the minister this morning that there was the quintessential génie français, so I'm glad we picked that one to partner with. But we've also decided to transform this partnership into a new chair to finance the specialized master, as the director of the school was mentioning. The second key point for me is also in terms of human capital development, the promotion of research. I think that's an important bit when we think about partnering with academia, which is quite important. I mean, one clear investment that we've made that was quite helpful in the negotiations of a Solvency II was the investment that we've made, and also together with the LTIA, our Association of Long-Term Investors later on, to invest with EDEC risk in the creation of a benchmark. And this year, and a few months ago, you started having real data on what infrastructure means and how we could define it as an asset class. And I think it's quite important in supporting the asset class and the investment that investors can actually access benchmark. The other side of benchmarking and research that we've been invested in with the Toulouse Schools of Economics. We've actually been financing a chair working on valuation of assets and the issues of stranded asset in the context of climate change, which obviously is a very complex one, but I'm sure most investors in the room wouldn't like to be stuck with a few stranded assets in 10, 15 years when we have floods and hurricanes. And I think this year was quite a good example of some of the worst things that can happen to our assets when we invest in infrastructure. So really, this was all for me, and I really want to encourage the market, the players to heavily invest in the human capital, because this is the way that you'll be able to create your own teams with people of good expertise, but it is also the way that the public sector can actually access the expertise required to develop infrastructure, procure them, and be able to invite you to invest in them. So thank you.
Is there any question for Thierry? Good. If not, congratulations. And last but not least, our roundtable number 3, dedicated to sustainable finance for green infrastructures. I'm very happy to welcome Philippe Zawati, Chair of Mirova, CEO of Mirova, Chair of Finance for Tomorrow, that Gérard Mestralet has mentioned in his opening address, which is the Paris EUROPLACE initiative dedicated to green finance and sustainable investment to try to accelerate the initiatives in Paris and on a European level in that field. Philippe, I let you the floor to invite your participants.
Please. Good afternoon. Okay, so I'm very pleased to moderate this third roundtable. So we have 6 panelists with us this afternoon with a very broad coverage of all the participants of this market. Please welcome Olivier Paquier from Amundi, in the real assets and alternatives department of Amundi. Tanguy Claquin, who is a pioneer of sustainable finance and heading the sustainable finance at the Crédit Agricole Corporate Investment Bank. We have then Emmanuel Legrand from Caisse des Dépôts, from CDC. He's heading the renewable energy within the Caisse des Dépôts. We also have the pleasure to have Frank van Lennep, the CIO of private markets at PGGM, the big Dutch investor. Romain Talagrand from BNP Paribas in the project finance and specifically in energy. And Sébastien Péjoan from Bouygues in the project finance department. So thank you all. So I'm Philippe Zaouati, as Arnaud just said. I'm CEO of Mirova, who is the responsible investment sustainable asset management company, subsidiary of Natixis. And with as you know, a big part of our assets are invested in infrastructure, and core infrastructure, and renewable energy. So the title of the roundtable is Sustainable Finance for Green Infrastructure. So we have managed to put in the title Sustainable and Green. So it was the first challenge, so check. But what does it mean? What does it mean green? What does it mean sustainable? It's always a big question. I would maybe start by saying that green infrastructures are often reduced to their most visible part, which are renewable energy infrastructure. Most visible, but also more mature part of this market. But we know that there are some larger definitions of green infrastructure. We have this kind of definition in the scope of green bonds, for example, with a lot of taxonomies from the EIB, from the Climate Bond Initiative. There are a lot of initiatives going on in this space to come to one standard in this area. We have also the French transition energy label, which define what does it mean to invest in green corporates, green companies, and green projects. So this is clearly probably broader than only renewable energy. There are infrastructure basically that have environmental benefits outside of the renewable energy scope, and these infrastructure need to be financed too. So maybe we could define green infrastructure as infrastructure supporting the energy transition, or maybe ecological transition more broadly. But on the top of that, even in the core infrastructure space, there is a question of resilience of infrastructure, which is more and more important, and that could become something very close to also the green topic. So I would like to start maybe by asking to our panelists to give a very, very short presentation of what they do and what their company are engaged in the green infrastructure space. So maybe I will start with Olivier, maybe.
Thank you, Philippe. Olivier Paquier. I'm working within Amundi in a new platform that was launched last year, which is dedicated to alternatives and real assets. Of course, Amundi, as Jean-Jacques Barberis told precedently, the second roundtable was basically invested in listed assets, but our clients, particularly our institutional clients, are asking us to invest directly through real assets, through us, into real assets. And that's the reason why we have created this platform. Within this platform, which has already almost 40 billion euros under management, The last expertise, which was launched last year, is infrastructure. As we came a little later compared to some others, we have a special project, and maybe I can explain a little more afterwards what is this project. But basically, it's a JV with EDF in order to have access to other types of projects, because green investment, it's not only renewables, as Philippe said, and for instance, it's also heating network or public lighting networks, and that's the kind of animals we are trying to put at the reach of institutional investors through our first fund.
Maybe I'm turning now to the two bankers, Tanguy first, and then Romain.
Hi, thank you, Philippe. So I'm Tanguy Claquin. I manage a team called Sustainable Banking within Crédit Agricole CIB. So that's the investment bank of the Crédit Agricole Group. And that's a team that takes care of all transactions within the investment bank, where there is a strong social or environmental angle. So Crédit Agricole is doing a lot of capital market activity, bond activity. So we've been very active in the green bond market. We were one of the first banks to start discussing that with issuer and investors. But we also do a lot of project finance and also other products. So that's what we're doing. Interestingly, I think this team was created back in 2009. It was at the time very unusual to have someone in the investment bank taking care of those type of topics. Sustainability was not a classical word in an investment bank. Now we are more than 10 people across all continents, and all investment banks have the same team. So we tend to think that we have kind of pioneered in this market.
Romain?
So my name is Romain Talagrand. I deal with the financing of what Philippe called the visible infrastructure, i.e. the wind farms, the solar plants. So what, you know, the kind of asset everyone is familiar with, I would say, or it comes obviously to mind. Maybe a quick word about BNP Paribas in the energy transition at large. I think the bank has made some very strong announcements recently that it wanted to lead the way in that sector. And there are a number of initiatives that have been announced, and I think there will be many more going forward. But the first initiatives are around the infrastructure, and in particular, doubling our financing of renewable energy assets. We also have an initiative in the green bonds area to increase the volumes of green bonds we participate in. And finally, there's also a capital development initiative to provide capital developments to innovative companies in the field of energy transition.
Thank you. And now we have the public sector with Emmanuel Legrand.
So I'm Emmanuel Legrand. You probably all know Caisse des Dépôts, so I won't be long, but just to remind you that Caisse des Dépôts, this public institution, is holding 350 billion under management, globally speaking. We are quite involved for many years now in the energy and ecology transition, since we funded various subsidiaries dedicated to these topics over the years. You probably knew CDC Climate. You know CDC Biodiversity, Novetic, which is a research and media expert in these fields. And there's also I4C, which is dedicated for all that deals with climate change. And we were really glad some months ago, to organize together with Paris EUROPLACE this Climate Finance Day. Probably some of you were in this nice meeting just weeks before the COP21, and whose subtitle, by the way, was how to shift the trillions toward the energy transition. It was quite a big success. So it's good to remind that. We did make our first green bond emission beginning of this year, and of course we are investing in many projects together with French developers in the French territories on renewable energy. Just to give you some figures, it amounts for more than 3 million euros of assets under management in the renewable side. and more or less 100 lines. And now we are shifting to other fields, since my responsibility is a bit more than renewable. It's ecology and energy transition. So we are going to invest in energy efficiency projects, but also maybe in waste projects and water infrastructure projects.
So then we need investors. Frank.
Yeah, thanks very much. I'm Frank van Lennep, CEO of Private Markets for PGM. PGM is an asset manager for 6-7 Dutch pension funds, largest which is PFZW, the healthcare pension fund. We have 200 billion assets under management. Of 25% is in private markets, non-listed. In infrastructure, we're really a direct investor, so we invest direct in projects. We've been investing in offshore wind for 8 years now, so we were, I think, the first institutional investor to take that risk on board. Very happy with those days, because you see a lot of pressure on prices currently, but that's an interesting topic to discuss further.
And then last but not least, we need somebody to build the infrastructure. So Sébastien, maybe a word about Bouygues.
Yes, my name is Sébastien Péjouan. I'm a deputy head of the project finance department for Bouygues Construction. Basically, we are in charge of raising equity and debt for all our infrastructure projects. Obviously, the group is very present in this field. We built and we are a co-sponsor in many projects. We are present in obviously on the transport projects, railroad, airport, sports, for example. We are present in the social infrastructure aspects, buildings, whatever type of buildings you can think of: school, university, hospitals, prisons, administrative buildings, fiber optics networks, street lighting, and we see a green component being more and more present, both as a demand from our clients, but as well as we see a focus more and more important from our co-investor, the investment fund we are working with, and the banks, the multilateral and the commercial banks. So it's a focus which is more and more important. Obviously, we are present on the renewable side as well, directly, but probably more as a contractor and not as a co-sponsor, or probably less as a co-sponsor than in the other field. Solar, wind, energy storage. So that's basically the field of what we are doing.
Thank you. I mean, so maybe let's start with the renewable energy market. This mature market. I mean, we know that the landscape is evolving a lot. I mean, basically it's becoming less regulated. The valuation also of the project and the market is very high. So in terms of financing these renewable energy project, what's going on? I mean, how do you see this evolution? What does it mean in terms of financing? Does it become easier? What are the new challenges? Is the market maybe fragmented between the mature and not mature technologies, for example? So maybe Tanguy, you can start with.
Well, if the question is, has it become easier now compared to 10 years ago? I would say that yes, it has become much easier right now to finance renewable energy. I mean, the technology has become much more a commodity. I mean, solar is a commodity. Onshore wind also. Offshore wind is going to become a commodity soon. It was a commodity for PGM maybe 10 years ago, but it's becoming easier on that front. I think 10 years ago, we were also a bit suffering from what I would call optimistic scenarios on the wind and solar planning of some projects. This is behind us now. I think we have very good certainties on the calculation of what we can expect from a given project. So I think from that standpoint, yeah, it has become much more easy to finance renewables than what it was 10 years ago. There is a lot of liquidity in the market right now, and so. I think the questions that we are facing now, I mean, the challenges that we are facing are clearly the question of the security of supply and how we would reward assets that would provide the security of supply to the network. I mean, when there is no wind blowing, there is a specific value for a thermal power plant, and this has to be rewarded. So there are a number of discussions going on in the market around this. So that's one question, and clearly, although the other question is the one associated to this abundant liquidity. In fact, when you have such an abundant liquidity, banks or players want to take more risk or are inclined to take more risk. We see now some players trying to push to take the merchant price risk, and then clearly this may change a little bit the dynamic of the market. So those are challenges that we need to be cautious about. You would probably expect me on green bonds. I think it's not a question of green bonds. I mean, you may have another question on green bonds later, but I think right now green bond is not linked to the ease of financing renewable energy. It may be in the future, but not now.
Roman, do you want to step in maybe? You told me that renewable energy is maybe the first step, but
I think I share Tanguy's views that the debt markets, I think, have responded very positively in the past few years to renewable energy, and there are a few examples to that. For instance, last year there was a lot of offshore wind activity. It was a very significant step up in lending activity compared to the previous years, and it was very easily absorbed by the debt markets. And even from the beginning to the end of the year, there was a significant compression in margin. So clearly the liquidity was there. I think you have other similar examples right now, and in particular the debt structures of renewable energy are very tight and are not really different from very traditional, very safe infrastructure asset classes. I think there are questions still how we can, how the market can manage that liquidity better, and in particular perhaps shift more of that of the long-term exposure from the bank ecosystem to long-term investors. But still the market is very positive. I think, the issue is what is coming next, because there are lots of things to do. We've done the easy bit, probably, the big wind farms, the big solar plants, and there are a number of challenges ahead. One clearly is a drive towards deregulation. Assets will be more exposed to price risk. The economics will be tighter, so there could be a change in risk profile. At the same time as we may have some less favorable financing conditions. Infrastructure in general and renewable energy in particular has benefited from low interest rates. It's primarily a capital investment, so it was very much favored by low interest rates. I think the other issues is we need to address a number of asset classes for which we don't necessarily have the financing solutions today. One of them is energy efficiency. Another one is how the renewables will integrate further into the grid and will be considered differently. We'll probably have a lot of small-scale assets as well, and therefore it will migrate a bit from the infra investment thesis that we're all familiar with.
But you, Emmanuel, sorry.
Yeah, just to add a word on renewable energy, I do agree with Tanguy and Romain, but we have to keep in mind that actually there are two kinds of renewable energy. We are always mostly talking about electrical renewable energies, and I do agree with what was said, but there are also what I call industrial renewable energy, and I'm referring to biomass projects where you have to bring in some rough material like wood or whatever it is to be put into the factory and to generate some heat and some electricity. And these projects are quite different, and the risk on these projects are quite different. As for the electricity renewable energy market, I do agree that it's difficult to figure out the future. The future, if all these projects are to be exposed to the electricity market, could be something like the oil industry, because the electricity market we are facing very high volatility in the market, so it might become a corporate financing in the end, but it's difficult to figure out.
I mean, you can maybe keep the floor, Emmanuel. You are a public investor at Caisse des Dépôts. So basically, why and when and what kind of in what kind of project do you think the public money is still needed in this space, and for what for? I mean, what to do?
That's a good question for us, especially. Probably not in the electricity renewable energy market, even if some small developers still need some help in the developing phases. What we are trying to work on now and in the coming months is the energy efficiency markets, and especially the refurbishing of real estate. It happens that we were asked by the French government in the Grand Plan d'Investissement, in the new investment scheme, to work on to invest 500 million euros in the 5 coming years in refurbishing the public real estate. And what's a bit tricky is that we are talking about very small projects. We are talking about 2 to 5 million investment per project. So what's going to be tricky is to find out the right way to make sure that there are enough projects and that we can overcome all the traps in the public, not ordering the public. The public procedures and that there are enough projects in the coming years, the public procurement, but we are working on that.
But basically, don't you think that in terms of public investment, we need less volume and more risk taking in order to maximize the leverage and to attract more private money in this space?
Of course we do, but we as Caisse des Dépôts, we have also to take care of the balance sheet and the results and the equity of the company, and it's better to find out a right way, an investor scheme, and what we are trying to do is to attract private money along with our public money. So we need something solid.
Turning to the investor, I mean, Frank, when these renewable energy or green infrastructure asset class became investable for you, and what does it represent today, and how do you see the future in your asset allocation?
Yeah, we still, depending on what our clients, of course, wants us to do, we're still interested to building up further our exposure to infrastructure in the renewable side. But already mentioned that there's been awarded an offshore wind park in Germany without any subsidy, which is good for a taxpayer perspective, but it's less good for an investor that's looking for stable cash flows. So getting more and more attractive in cost terms makes it less and less attractive for us as an investment. So we have to look to other investments. So currently we're looking at more getting earlier in the stage, early stage investing, and we're looking at other kind of initiatives with a bit more technology risk to invest into, so more in the private equity space. Another thing is that it's not only infrastructure where you can see the green effect, it's also green bonds. I'm not very in favor of green bonds, although we do invest in green bonds. I'm not totally sure that you really make a big impact by investing in green bonds. We're working now with a certain bank on a new initiative where the credit margin on the loans provided by the bank, and we take over the risk of those loans, is linked to a score the company get on ESG items. So if they can increase the score on ESG, then the margins will go down. So there's a big financial incentive by the CFO to get his company ready and to implement the right things. So I think that that kind of financial incentives works much better than just labeling it, just bookkeeping, labeling a bond green.
Tanguy, you have to make the case for green bonds.
Okay. I think, in fact, the impact of a green bond is not in the green bond itself. On that, I'm with you. I think if EDF is doing a green bond, if Bouygues would do a green bond, if BNP or Crédit Agricole issues a green bond, it would finance projects that we would have done anyway. And if PGGM buys this, it will be the same price and the same credit as any other. So there is no debate about this. I mean, there is no impact in the product itself. Where there is an impact is that right now in the capital market there is almost 300 billion of money that is green, and it is flagged to green, and there are some market practitioners working on this topic. If we keep on growing this way, this pace, maybe in 2 years' time or in 5 years' time, I don't know, it's going to be 2, 10, 5 trillion of assets in capital market that would be green. And then it would be a market per itself, with its own dynamic, with its own dedicated investors, with large funds, and its own pricing mechanism maybe. And then it would be a source of liquidity that companies and project promoters and project sponsors will not be able to avoid. And that's the goal. That's where the market will start to have some additionality. And actually, PGGM is playing its role in this market because you are active, quite active on the bond side. So and you play a role in developing this market. So I'm with you. There is no impact in a single transaction. There is an impact in the growing of the market. I will come back to your point because you give me the floor, so I keep it.
Keep it.
This product of having an incentive is interesting because, in fact, the company you're investing, she's got an incentive to improve its ESG performance, but it means that you have the incentive that they would underperform because the spread would be larger, which is also quite interesting from an investment standpoint, except if you think that the credit will increase or the credit quality will increase so much over time that it will deserve a spread decrease, which I think you cannot demonstrate right now. So I think right now it's a nice product, but it's a bit like, also a little bit like a gimmick, like some people say about green bonds. I think this may be interesting if at some point we're able to demonstrate that there is a link between both. And we have tried to do that in the past in the bond market also, to have bonds where the spread will be linked to the performance. And because many investors told us, I mean, and in the French SRI community, which is very diverse, some people were very much in favor of this product because they said, in fact, as you said, I mean, it pushes the company to perform better. But the other half of the investor community was really against that because of the negative incentive it's created. So there's debate also around this. Thank you.
Yeah, but I mean, just you can keep the micro just 1 minute. I mean, is there a link between the green bond market and the infrastructure financing?
Well, as I just said, I think right now there is. I mean, the beauty of a green bond is that an investor that has a green mandate, and there are some funds at PGGM with a green mandate. There are many at Mirova. There are also big funds at Amundi with green mandate. They can buy a bond from any company in the world, any bank in the world, which is green, where there is a commitment from the issuer to use the money for green project. And so the diversity of credit that such a portfolio manager can buy is much larger than if this portfolio manager could buy only green infrastructure projects. So that's where the market is growing right now for non-pure player. If you look at the infrastructure market right now, if you buy a bond from an energy developer, a renewable energy developer, or a green infra, it is green by definition. So it doesn't need the green bond market right now. So I would say that right now there is no need in the infrastructure market for green bonds because those are pure assets, if you wish. It may change if we have a 2 trillion large green bond market, because as I said before, we will have a market with its own dynamic, really dedicated investors, and then maybe a pricing dynamic that may be different.
If you may,
yeah.
If I may, no, I just want to testify because we thanks to Tanguy on Crédit Agricole, we made our first emission at the beginning of this year, and the result was really interesting, internally speaking, because we put the spotlight on these topics, but also financially speaking, and probably for the first time the spread was tighter by 1 or 2 bips because it was green. So it's always difficult to measure, but we think it was a good result.
Maybe I could say a quick word too.
Quickly, because
I think the thing about green bond is essentially it's a corporate instrument. So the question is how much more money is channeled through that instrument. And I think when you look at the scale of the investment that is required, you will need to create an asset class that can be financed on a non-recourse basis to address this. And the challenge we're facing is it was easy to find for wind farms and large projects, and it's more challenging to find for smaller projects, and that's why it's being channeled also through corporates and through green bonds. But whether that's enough to address the challenge we're facing, I don't know.
I would like to ask maybe Olivier now to give us your vision about what can asset managers bring to this market, and what kind of products, and what are the objectives you can follow.
Thank you, Philippe. No, I think just the transition is easy because, of course, I agree with what was said. It's very difficult to know exactly how much is needed to finance the energy transition. Of course, some figures are given. It's said that for France, only for France, up to 2040, the amount is 150 billion of euros, which is needed as new investments. For Europe, it's sevenfold this amount, and then for the whole planet, some figures are given about 10 trillion of dollars up to 2040. But those figures, it's very difficult to assess those figures. The only thing we can say, I hope that it will be a consensus, at least among the panelists, is that if we are serious about tackling climate change, the only thing we know is that we need to invest more than we are currently investing. All means could help to reach this goal. We talked about green bonds, but once again, investors are interested also to finance directly projects and to own real assets. It's not only renewables, also it was said by Romain, it's for instance heating network. It's not as easy as a wind farm or an onshore wind farm or a solar plant to invest in because it's a complicated set of contracts. It's a long-term investment. It's a risk that is difficult to assess for usual investors. So asset managers are typically useful to try to gather some expertise and to enter into some partnership in order to fill this expertise gap and to allow investors to take part directly to those kind of projects, which are, as Romain said, sometimes each project is a small one, very difficult to organize with a non-recourse financing. But if you have an asset manager who is able to invest into equity into a collection of very small assets, it could create something which is a vehicle which is able to get some non-recourse financing and to be in equity interesting for institutional investors.
So you see the asset manager as a sort of aggregators
exactly.
Of small projects.
Exactly.
Is it is it really the solution? Are there other solutions to maybe put together a lot of small projects and
at least we have
create some new vehicles?
As a latecomer into the infrastructure project, as I said at the beginning, we have, for instance, the first transaction we made at Amundi Energy Transition was a transaction which is, 130 small co-heat and power projects throughout France. So, and the economic value of the deal is 150 million euros. So if you divide the number of projects by the amount, you can see that each project is approximately 1 million project, so impossible to finance otherwise than in a global project. So it was a dedicated fund that was organized, and it's just an example of what could be done in order to either to get access, to give access to investors to a new type of projects, but also to finance green investments where everything is not already done as it is currently in solar or onshore wind farm.
But for example, in terms of the refurbishing of houses, energy efficiency of houses, it seems that we still do not have the solution.
Yes.
We
have discussed that already, Philippe. So it's an example where, of course, small projects could be put together, but the incentive is lacking. Currently the price of energy is too low. It's very difficult to have a return for private investors in such kind of projects. So that's the reason why we have not already found the way to invest, even if it's needed from a political and a global standpoint.
Give me the opportunity to ask maybe Sébastien, what do you think about this? I mean, what are your clients asking today in terms of energy efficiency, in terms of labeling of the buildings and so on? And is it so difficult to increase the energy efficiency?
For the new buildings, it was said that's the easy part, I would say, because the new building, most of them are relatively big. And we have a lot of demands from energy efficiency from our clients, whether they are public in a PPP format or whether they are private. So that's something which is not new, but really now everybody is asking for buildings which are either making energy positive buildings, BEPOS, or at the minimum with a label. There is different label, whether it's HQE in France, whether it's BREEAM, whether it's LEED. But with different category. But there is always a component of labeling in most of our projects. And in addition to that, in the PPP projects, there is another layer which is a performance control. And we have a system of penalties during the life of the asset. So we have a commitment in terms of energy consumption, with a very strict key performance indicator, and therefore, I think on that it is a very strong trend that we see in all our projects. I agree that that's a lot more difficult for small projects, for contract performance energetic when it comes to refurbish existing building. The magnitude of the works are quite small, and if it's about 2 or 3 million, then we have an awful lot of difficulty to find funding and to find investor for this type of project. With regards to renewable on our side, I agree as well with what has been said. I mean, solar, wind. I mean, we don't seem to have. Also, we are not necessarily a co-sponsor, but we see what's happening, and there is no difficulty to find funding for this project. Maybe I will add there is a number of projects coming into the market, maybe more with a more merchant component, like energy storage, for example. And this, as far as we are concerned, we are bidding a number of these projects in the UK, in France, and in different parts of Europe. They tend to be relatively small, which makes again the funding difficult to find, and some of them have some revenue characteristics which are quite different. The stream of revenue is not necessarily long term. We have a stream of revenue where the revenue are guaranteed for 1, 2, 3 years, and that makes something which is a little bit more difficult for the funders to be comfortable with. I think it's a market, as far as we're concerned, which we see a lot of private investors on the equity side, and we don't see the banks yet because I don't think they find the way to finance this type of asset.
Okay, about energy storage, which is maybe one of the big thing in the next couple of years. Any comments on that? Maybe Emmanuel.
Just maybe a comment. As I said previously, you know that the electricity market is only 3 years long, so you can buy a contract on 3 years, but no more. So it's very difficult to anticipate your revenues for 15 or 20 years, and probably the paybacks are not short enough to have the characteristic of an infrastructure. So there might be a shift in all these projects, and if. Well, as long as you have a feed-in tariff and you know what your revenues will be for 15 or 20 years, it's good. I mean, and the risk is more or less a sovereign risk, since it is in the end the French state or whatever European states that pay for to make sure that you have your revenues. But when it will come to sell the electricity on markets, it will be quite different. So on the storage, it's probably that might be the solution, but the technology is not here yet. And we hope it might be there in the future, but it's still difficult to anticipate.
You want to add something?
Maybe one comment on this and also what Sébastien said. I think there's probably a need also to rethink regulation of electricity sectors. The regulation has been designed, to install as many transmission and distribution lines as possible. And now we need a regulation that incentivizes, smart grid, storage, decentralized production. And I think it would be difficult to find the right financial model for this and the right business model until there's been a rethink of that regulation a little bit. Now the incentive on a cost-plus basis to build connection is probably not the right incentive.
And it's also a question about dealing with technology risk. You mentioned storage, but what about non-mature renewable energy, like energy from the ocean and these kind of things? How do you think we can finance the technology risk?
Well, we did that as a public group, and both BPI France, BP, which is investing in the corporate ventures, and also we did that in some financing some projects as well. And on some technology, I won't mention, but on some technology we lost quite a lot of money.
Maybe I'm going to take a couple of questions from the floor. Yeah, there is one question here.
It works. Thank you. Pascal Schuster from France Stratégie, the public French think tank. Thank you very much to the panelists for presenting us their point of views. My question is rather simple. You did not mention the words carbon price. And my question is why? Thank you.
On the carbon
price. Carbon price? Who wants to step in on this?
Yeah, we strongly believe that finally that's the solution to get the right incentive in place to price the emission of CO2.
Maybe, I don't know whether you remember, but at the first roundtable there was Olivier Garçon, and he talked about regulation and regulation on financial institutions, and about the green. He said that it's very difficult to have, an incentive in terms of regulation, but he expressed the view that we have to think about a kind of punishment for investment, for instance, into coal or maybe even oil activities. He didn't say that, but it was maybe what he had in mind. So that's the same idea. If it's very difficult to invest, for instance, in buildings or in some useful investments, it's because the price of power is too low, because there is no carbon price. So I think we all agree on that. The only difficulty is how do you get a carbon price for all Europe? If you have any idea of how it's possible to get that in the coming years.
France Stratégie has an idea about this. No. Maybe there is a window for this, or there will be a window for this in a couple of months. With a French-German initiative on this, probably after Germany has a stable government.
For sure, on the carbon markets, we need a strong initiative, because we are some of us, and we were lucky to fund one of the first carbon fund together with Natixis some 10 years ago, ECF. But then the market collapsed, and it killed quite a lot of companies on those markets. So we need something really strong, and I'm wondering if the relying on the pure markets initiative is the right path for everybody.
Another question? Yeah.
Bon, moi, si je m'occupe de gouvernement d'entreprise, je voudrais vous rappeler qu'il y a une évolution importante chez les pétroliers pour tenir compte du financement des énergies renouvelables. Le solaire, les éoliennes, je pense aux 3 grands pétroliers, ExxonMobil, Shell et Total. Et je rappelle aussi qu'il y a pour les investisseurs institutionnels, je parle des fonds de pension, PGGM ou BlackRock, une préoccupation dominante aujourd'hui, un défi, c'est de valoriser, de se conformer aux normes ESG. Donc c'est pour ça que PGGM ou Triodos ou BlackRock actuellement sont prêts à financer, à encourager le développement d'énergies renouvelables et d'infrastructures. Qu'en pensez-vous?
Okay. So the question was about ESG investing and how can renewable, fit in a more broader, ESG strategy.
Yeah, well, you're right. That it's finally, I think oil will not be necessary, but we strongly believe that for the next 30, 40 years, you still need oil and gas to bridge the gap to a full green energy production. So in the meantime, we can do everything on engagement as well with those companies to incentivize them to go further than only fossil and broaden their space as well.
Okay. Any other question? No? Maybe one from me, just maybe to follow up on this ESG question. Basically, do you think that all green infrastructure is by definition sustainable? And how do you analyze, the investment and in terms of, especially of social impact? I know that PGM is also looking to the Sustainable Development Goals on a more broader view. So
yeah, that's what I started the discussion with. Is that environmental is just one element of the way we look at companies and projects. So S and G are as important as the E. So we really try to integrate all elements and all the Sustainable Development Goals as well. And score companies and projects on those criteria.
Thank you. So we are just maybe reaching the conclusion point. So yeah, Emmanuel.
Yeah, I'm sorry, I wouldn't miss the opportunity to mention that there is something new which is quite interesting. You know that energy efficiency is a priority of the European Union. And that the Eurostat just delivered an orientation regarding the energy performance contracts. That could change things. The energy performance contract in the future would be considered off the balance sheets of public entities. So that's quite interesting, and that could trigger some more projects in this new area.
Yes, this is actually this is one of the recommendations from the high-level expert group on sustainable finance, and yes, clearly, alongside with a lot of other recommendations, but this is clearly something very important. Do you want to add a conclusion word about this panel?
You opened the door, Philippe. With the recommendation of the high-level expert group,
yes,
and specifically on infrastructure, there is a very interesting recommendation. Maybe you could extrapolate on this a little bit.
So this is there is one very important topic within the high-level expert group, which is about infrastructure, and one of the idea which is currently on the table is to create a new organization at the European level, which could be a sort of infrastructure Europe entity, which will be in charge of, clearly helping all the especially the territories, regions, municipalities, and so on, to create some new pipeline of projects and to make the link between this project and the financing tools. So we know that there is something very similar to this which already exists in the UK with Infrastructure UK, and also in Canada with Infrastructure Canada. Of course, in France we also have FinInfra, but at the European level, probably we lack this kind of organization. And this is one of the recommendations which came from the high-level expert group. As you know, the interim report has been issued last July, and the final report of the high-level expert group will be published probably in the first weeks of the next year. Any other comments or conclusion you would like to make? Okay, so if not, I'm going to thank you very much for participating to this panel. And I give the floor back to Arnaud. Thank you.
Thank you to all of you. Very interesting discussion with the various market representatives. I want to thank and congratulate our friend from PGGM from Netherlands, investors and market players, to talk about the subject of green finance, green bonds. And we have seen the challenges that this new type of products is offering for participating to the financing of infrastructure and the future of finance. And thank you once again to Philippe Zawati, who is giving some time and support for developing the EUROPLACE activities in that field. I think that all of you have in mind the next 12-12, like our American friends already called the next Global Summit, which will take place in Paris on the 12th of December. And that all of you are already preparing, like our American friends, contributions for this important global summit, which will be organized by our President, Emmanuel Macron, with the participation of international head of states, to talk once again and to see what can be the next steps in terms of climate economy and the contribution of the businesses to contribute to the climate debate and initiatives. And for us, we will have the day before, so the 11-12, 11 December, the third Climate Finance Day, International Climate Finance Day, with in which we are waiting a very big number of participants to talk once again about the next steps with representatives of corporates, of investors and banks and financial intermediaries, and make new recommendations and celebrate new initiatives, new important initiatives, which will be announced by a different type of market players. So you are all more than welcome in Paris for these 2 big days, if it can be interesting and relevant for you. Now, this session has been so efficient that we have saved 10 minutes that you will have the pleasure to have a drink a little bit earlier than the program was mentioning. But before, we will have the final speeches and participation of our partners for the organization of this event. May I invite François Riahi, Global Co-Head of Corporate Investment Banking, member of the Management Committee of Natixis, to join. François, Alain Rocher, CEO of Antin Infrastructure Partners. We have mentioned the brilliant initiative of Antin today. We'll come back on that. Mr. Prime Minister Lionel Zinsou, President of Africa France. We are working very closely with Africa France and Lionel Zinsou about the developments of new projects for Africa in all type of fields, including the financial sector. And last but not least, our friend Philippe Pontet, Chairman Global Banking and Markets by HSBC, HSBC, who is a partner since the beginning of all our works and all these initiatives concerning green finance and sustainable finance. So, Philippe, the floor is yours. Sorry, François.
Thank you very much, Arnaud. Good evening to all of you. Let me first thank the panelists for their vivid contribution to the debate. I would like also to thank all the participants for, and your attendance demonstrates further need to have such debates around infrastructure, but also that Paris is the good place to have these debates. And what has been discussed today echoes really, the way we look at infrastructure in Natixis, and I would like to underline two important points that have been discussed today. First, of course, infrastructure is a huge market. It will continue to grow, especially with emerging markets. But the specific element of this asset class is about the long term. And the financing, what has been really an important change during the past years has been the fact that this long-term financing that was brought mainly by banks is now challenged by the regulation. And of course, regulation has been pushing banks to reduce their funding at a very long-term assets. And in Natixis, we have been convinced that actually a key was about cooperation between banks and non-banking financial institutions. And actually, since 2012, our development on the infrastructure market has been fully based on the cooperation between us and the non-banking financial institutions by helping non-banking financial institutions to beef up their capabilities and their know-how and their knowledge on the market, but also by bringing to our clients, the borrowers, new pockets of liquidity and sometimes innovative features that were coming from these non-banking financial institutions. And how we have done that exactly? First, we signed some strategic cooperation agreements with numbers of institutions in Belgium, in France, in Germany, but also in Korea. And we have, doing so, brought this infrastructure platform more than 6 billion of institutional liquidity, 6 billion euros. At the same time, we have sponsorized since 2012 a research chair at EDEC Risk Institute that contributed to build a favorable regulatory treatment under Solvency II. Other thing we did was to, for example, create an annual full day dedicated to market trends and issues on infrastructure. It's called the Infra Day. We'll have the 5th edition in just a few days. And this year we are particularly happy that we could join it to this initiative taken by EUROPLACE and the French Ministry of Finance. And of course, it's a great development for us. So, since 2012 and what has been done during these past years really demonstrates for us that this collaboration between non-banking financial institutions and banks is very fruitful for the sector of infrastructure And clearly, even if these past years have been seeing the reduction of banks' share in financing the infrastructure, we feel and we consider ourselves more than ever as an infra bank. The second topic is the one that has been just developed in the previous panel. It's about financing the energy transition, and clearly it's an important element of discussion in this infrastructure sector. We are very involved in this. We financed our first renewable projects 20 years ago, and I think we are today recognized as an important player in this field. But green financing, as it has been recalled today, is not limited, of course, to renewable energy financing. And there are a lot of other topics like mobility, like green and soberer buildings, smart grids or energy storage projects, but also all energy efficiency and decarbonization efforts or land use and sustainable forestry investments. Of course, the financial industry is a key player of this transition as a provider of capital, but also innovation. There have been a lot of innovation these past years and months. And a quite convincing example of this is the green bond market, which globally rose to an impressive $278 billion outstanding from only $38 billion at the end of 2014. What we think today is that for us as a bank, it's very important to have a product-neutral approach towards this evolution of the financing tools to fund the energy transition. It can take a lot of forms, of course, green bonds, of course, the financing of renewable energy, but also some securitization products. We issued, for example, the first CMBS, green CMBS on the US market, and it's just an example of the potential on this field. Green loans and so on. So there's a real development of innovations that are emerging from this green transition. And at Natixis level, we have decided to create a green and sustainable hub that is completely product agnostic, and that is really devoted to this type of innovations, working with all our business lines. So these are the 2 points I wanted to highlight, and I'm very happy to leave the floor to Alain Rocher for Antin.
Thank you, Frédéric. I will try to be brief because I know it's been a pretty long day for all of us and for all of you. I'm very pleased to announce that Antin has sponsored actually the creation of an infrastructure chair with HEC. We just signed an agreement, our agreement this morning with the school. So I would just like to take use of this time to make a few remarks. First one is, what is the background of this decision? Secondly, why pick HEC to do this job? And thirdly, what will be the pedagogical content of this partnership? The background of sponsoring a chair stems from the fact that on one side we enjoy a very, very rich and interesting ecosystem in France in particular, with plenty of large corporates, large financing banks like Natixis, many investors who are very, I would say, knowledgeable about the asset class. And yet, when we put the team together, we found that we could attract some people with very good private equity background, but no particular knowledge of the intricacies of infrastructure investing. we could attract some people who had invested in some regulated assets, but who did not have all the skills required to create some value on the assets. And therefore, we came to this very simple realization that we need to take action to improve the knowledge about the specificities of our asset class. We also realized that as the asset class was growing, Gérard Bestralet mentioned that last year we reached 33 billion euros of assets under management just in France, 100 billion about in Europe, and about 250 billion euros globally. There is a number of issues which are going to shape the future of our lives as citizens and as corporate entities. Mobility, I think talking today about transportation, I think is passé. Clearly, tomorrow we shall have to invent new ways of thinking mobility for people, for goods. Climate transition, of course, is something absolutely evident, which poses extremely complex issues, because as we grow renewable energy, we also increase the level of complexity required to provide some stable and reliable source of energy at any time during the day. Climate, evidently, is also going to be a big theme, climate transition. And as citizen, of course, it's something which will be very, very important going forward. So we think that not only do we need to improve the overall knowledge of professionals in our sector, but also to participate to increasing the level of knowledge among, I would say, the citizens, whichever country actually be there. And I think it's a big, big challenge, because we found that many public policies on infrastructure actually are very poor, just because there is no proper, I would say, thinking, no training for key decision makers, be them in the private sector or the public sector. So that prompted us to take action. Now, why did we pick HEC? I would say for two main reasons. The first one is we wanted to invest in an academic program in a university or a school which is a school of excellence. So for us, excellence was extremely important. We didn't want to have something cheap. We wanted to have something very material to be sure that, you know, our investment, because it's an investment in this program, would impact on future decision makers. The second obvious reason is that more than half of the students at HEC are non-French. And they come from very different countries, be it other European countries, America, Africa, and Asia. So we thought that, you know, it was also a way for us to spread, I would say, the good news, so to speak, of infrastructure, and be sure that, you know, we had some proper relay in various opinions. So that's really were the two main reasons behind that. The third one, of course, was the quality of the academic team. As you know, HEC ranks among the best business schools in Europe and in the world. And for us, working with Professor Grommer, who is an excellent academic, was extremely important in that selection. Now, the last point is the content of the training. We gave a lot of thought to that with HEC academics, and we decided to make it very pragmatic. So we have decided to work on creating some case studies, focused on some very particular and very, I would say, data-driven cases. We have decided to share actually some data on a deal, which, as you may understand, is quite rare in our industry, where people are very secretive. But we thought that, you know, as long as there was no secret to betray, we thought it was very interesting. And we also thought that it would make a very lively training for pupils, for the students. We also decided to not only create a case study, but to commit when, at the end of the session, where students have studied the case study and presented their conclusions, that some people from Antin would come and say, okay, we've listened to what you guys said, now this is what happened in the real life. As a student, I dreamt of moving from a concept to real life, and I think we'll try to do that. So that's in a nutshell what I wanted to say. We are very proud to have achieved this program, this sponsorship of a chair. It's part for us as a wider program. We also have developed a similar program, but focused more on academics with the University of Bocconi, which is Italy's largest university. And we're about to implement another program at Cornell University in America. But we are very thrilled to do that with HEC. Thank you.
Thank you very much. Presentation of new concrete initiatives like Natexis with François. Now, Mr. Prime Minister Lionel, we have discussed in the sessions the needs in Africa, in South countries, and Bruno Bensasson from ENGIE said that the needs were huge, and that we are just at the start of the way to satisfy all these needs in terms of energy equipment, electricity, and all of these questions of infrastructure. You have been Prime Minister in Benin. Concretely, how do you see the next steps for Africa and southern countries confronted concretely to these questions of infrastructure financing?
First, thank you very much, Arnaud, for having me, and good evening, ladies and gentlemen. I was especially pleased because before being Prime Minister for a short while, I had the opportunity to work in the investment world as an advisor to private equity funds, and then as the CEO of a private equity firm. So I spent 20 years in this capacity, and only 10 months as Prime Minister. So you see, for me, it's a good ratio. I think it's a good ratio.
I understand, Mr. CEO.
You see that some French Prime Ministers do the reverse way, but I think it's very healthy. Okay. Now, I wanted to say that what Mr. Bensasson has underlined is very, very important. We in Africa have immense needs. First, because we have shortages in terms of mobility, in terms of connectivity, in terms of social infrastructures, in terms of access to water, absolutely key, vital, in terms of access to energy, with 70% of the population deprived of light, which is one of the essential elements of a modern life. But more importantly, if you foresee our future, we have to sort of educate, take care, and move, and another billion of our fellow citizens in 30 years. We have to create for them an urban environment, because we will add a sort of one Europe to Africa in African cities. The prospect is, in less than 30 years, to have another 500 million urban citizens. So the needs of today are immense, but the constraints of tomorrow, in terms of infrastructures, are just exceptional. I'm not sure I found in the panel on Africa an immense optimism. I would like to say that I'm a bit more optimistic than the tone, the current tone. First, I'm absolutely of your view that the cooperation of players and the DFIs cooperating
with the private financial and the banking financial centers of the planet and the asset managers, that all is far more efficient today. You say that very eloquently. I think it is a major shift. The fact that MIGA, in terms of guarantees, like the bilateral agencies, like AFD, the fact that the IFC is more and more efficient in support of the private sector and able to syndicate other partners in equity and debt, all that is a major shift. In 2015, in a UN conference in Addis Abeba, the principle of supporting the private sector through the DFI's balance sheet has been agreed by the international community. I think it's an important progress because they were, in the recent past, very much alone, not syndicating with the private financial sector, the banking, private or not private, but banking financial institutions. This is a major change, a step change. So this is a factor of optimism. The second thing, I think the rule of law in Africa is making progress. Quite spectacular. I would say we have made, in terms of rule of law, more in 5 years than in 50 years before. We have a little problem, maybe. Our courts in Africa are maybe a bit less reliable than our texts and our laws, our regulations. This is a problem, but the arbitrage courts are very much more important today than in the past. So even in terms of rule of law, I think we have made a few important steps. Having said that, I think that the problems are the public authorities. Because if I've learned something from the private equity, is that you absolutely need, for long-term investment, an alignment of interests of all stakeholders. I think, and it has been also underlined, speaking of the various sectors where you have B2C business models, that it's easier to finance. Take the telecom. We have gone through a telecom revolution, which has, on the digital economy in Africa, immense and very positive effects. Life is better, productivity is better. It's a major change. This has been financed. And you have a component of infrastructure, which is very important in telecom. This had a business model with abundant free cash flow in the telecom operators, so that you have self-financed the infrastructure, major transformation of Africa. When you have to finance a power plant in Africa, if you sell to a state-owned electricity operator, you really need, and you start to get, but you really need a good guarantee scheme. Because all our operators, in 80% of the cases, are in jeopardy and bankruptcy, which doesn't help for the credibility of their signature to buy what you can have to deliver in terms of energy. So you need the new guarantee schemes, which are now in place. Nevertheless, you have a problem if your counterpart is a public body. It's very different if you make a power plant for a cement factory, for anything which is a reliable client for the long term. And when you consider the mini-grids, you have the final consumer, which is your real counterpart. So it's easier to finance. So the problem is, are you aligned with the government? And you can't, because the government is, in terms of its rational expectations, is always, in every country, even maybe in this room, very busy at winning the next election. And if you have to define regulations, if you have to define tariffs, for instance, electricity tariff, it's all over the world, a conflict of interest of the government in between its interest or the social interest and something which would create a good environment, healthy and profit-oriented for the operators. So you have a conflict of interest. And in terms of time horizon, the problem is that if you succeed, if you are re-elected and so on, your horizon is not very much more than 5 to 10 years, not 20 or 30. And as Africa becomes more and more democratic, we have more and more changes, and each government feels that the previous government was really a very poor government. And it's very difficult to have, in terms of continuity, the state signature being respected. So you have not an alignment of interest with state-owned bodies or the public authorities themselves, with a few exceptions in Africa. So what I would say is that we have to work on that. And the magics of working with DFIs is that any government, when a project has been financed by the private sector, by the banks, when the liquidity has been captured on the world market, if a DFI is in the shareholders group, there is no government in Africa which is able to confront and be aggressively acting against any DFI. So that's one of the magics of the system. And it's not only the DFIs. Maybe you could ask yourselves, why is it that China is financing so many infrastructures in Africa? Because you have not only the Western world, you have a competition today. When you make any railway, harbor, airport, dam, whatsoever, where you have Chinese financing, Chinese propositions. One of the reasons, it's not that cheap. It's not that you are given that as a grant, as a gift. It is that you cannot be in any hostile position against China for the coming 30 years. So you have to, I think, consider that if you want to align the long-term interests of governments, public bodies, you have to have a third party in the coalition, a party that you cannot become at any time in the coming generation. You cannot be their enemy whatsoever. And it is the case of the World Bank, of the African Development Bank, of the Islamic Development Bank, but it's also the case with the People's Republic of China. And in a sense, it's also, for more social infrastructures, the case with the Bill and Melinda Gates Foundation. You have parties and coalitions are needed that you absolutely cannot oppose, and that for the coming 30 years. And I think this magic combination will be a substitute to the 5-year, 2-year, 3-year horizon of any government across the world, and especially in a democratic Africa. So that's why I think we are finding solutions to make sure that long-term projects be viable and reliable projects going forward.
Thank you very much. You were mentioning that this question should be also raised here in that room, but it's exactly one of the messages that Minister Bruno Le Maire also made in his opening speech when he was talking about the necessity to invest for the general interest and not only for particular issues, including on the local level. So this is the way this day is concluded with reminded the introduction. I'll now let the floor to my friend Philippe Pontet, who will conclude this day. Thank you, Philippe.
It's clear for me to speak after my friend Lionel, because he's my chairman at the board of the Quai Branly Museum, so he's the last speaker. Well, ladies and gentlemen, dear friends from some of you, as you can imagine, it's not exactly comfortable to be the last speaker when everything has been excellently said during this very busy and interesting afternoon by outstanding speakers and highly professional speakers. So forgive me not to be original and perhaps to be a bit redundant. But to be brief, I will try to stick to the essential. As chairman of our investment bank, it's of course a great honor for me and for HSBC to deliver this closing speech. And I do it also on behalf of my friend Jean Bernardo, our country head in France, who chaired and animated the EUROPLACE Working Party on Infrastructure Financing, which presented its report and conclusions at the beginning of the year. And this report was somehow created the backdrop of the meetings we have had this afternoon and of the other events which will be taking place along this whole InfraWeek. If we give a quick look back to this report, we see that three main findings were about. First, the size, the diversity, both on sectors and geographies, of the global public infrastructure market, but also, it has been underlined several times, its extraordinary complexity. Second, the excellence, and I think that this word is not too strong. I'm not blowing our own trumpet. The excellence of all the industrial and financial members and partners of the Paris Place in this field, most of them being in this room today. And these partners form an impressive sum of talent, skills, financial strengths, but we must not hide behind our finger. We are now challenged by both our traditional competitors from the industrial world, but also by dynamic new entrants from emerging markets. And of course, Lionel just evocated the Chinese, were big bang in main China, and of course, they are extraordinary competitors with a firepower which is very, very, very impressive. Third point, the necessity to work, it has been said also, collectively between all the public and private entities of the Paris Place, in particular, the European and French public policymakers, the industrial companies, and the financial institutions, to mobilize ourselves and coordinate our actions. And this conference today and the following days will be an important milestone in this process. What we have seen today confirms, updates, and complements these findings. As we all know, the overall traditional infrastructure market is huge, but it is now being at the same time increased and deeply modified by the necessity to contain global warming. We see now a growing convergence between climate finance and infrastructure finance. And this is why we, HSBC, have organized during this InfraWeek, it will be next Thursday, a special working party on the theme. Beyond the assessment presented this morning, earlier in the afternoon, by McKinsey, by the McKinsey report, Bridging the Gap, we can also quote that the estimate made by the OCDE, according to which $1 trillion of US dollar will have to be spent every year, each year, globally in infrastructure, if we are to meet the commitments, and it will be the minimum, if we are to meet the commitments made during the COP21. And it's extremely good news to know that an international conference will be held in December in Paris. Arnaud evoked it. Will be held in December in Paris to progress in the implementation of these goals. By the way, I was a bit amazed that we could be suffering a lack of projects. We have no project enough, I heard twice. So let's promote the projects. Another point is that the size of the market fully confirms the need to deploy what is called blended finance, evocated at many times this afternoon. A combination of public and private funds to fund projects, of which the Juncker Plan provides an excellent example. We know that whilst public funds by themselves cannot meet, Bruno Le Maire said that this morning, we know that whilst public funds by themselves cannot meet the huge amount of financings to be raised, public funds have a key role to play to de-risking projects. And if they do so, or don't do so, but if they do so, the immense liquidity generated by international savings and boosted by the quantitative easing that will last, policies will be ready to flow in massively into projects offering an acceptable risk-return profile, of course. Then, structuring projects to make them bankable is not only about combining public and private financial tools, but it also requires a strategic dialogue with the country where the projects are to be implemented to make sure that the policy and legal framework, as well as the necessary skills, are in place, as well as the necessary skills. And it's comforting to know that the European and French policymakers, as well as the multilateral and national development banks also present in this room today, are active in this field. To conclude, beyond the progress we made these recent years, the task we still have in front of us, and all of us in our respective roles and responsibilities, is huge and complex. But at the same time, it is fascinating and rewarding that it provides a historical opportunity to do large-scale business while contributing to fostering sustainable development and mitigating the global warming. In front of this challenge, we have all reasons to be optimistic, both in our collective capacity to meet the challenge and in the ability of the Paris financial place to play a key part in this global game, as in Paris we see and welcome a great cooperation between European and French policymakers to fine-tune the regulatory and tax environment and complement the toolbox we need with financial instruments. We already have, it has been said, very powerful amongst the leaders in the world. We have very powerful and skilled financial institutions, banks, institutional investors, and we are ready to welcome new colleagues and partners. We are open. And we also have at close range global industrial players, they spoke today, in this area of public infrastructure and related services with whom we are used to cooperate. It's important to know the guys we are cooperating with. Overall, Paris has everything it takes to accommodate quantitatively and qualitatively a significant part of the investment needs requested to support a sustainable and climate-friendly economic and social development, and this will add to the already high degree of attractiveness of the Paris place, as Bruno Le Maire underlined earlier this afternoon. In conclusion, I would like to thank the French Treasury for organizing this event with EUROPLACE and for welcoming us in this famous place of Bercy. And I would also like to thank you for your presence, your contribution, and your attention throughout this conference. Dear friends, after almost 10 years of difficult, very difficult economic environment, we are not entering the paradise, but we obviously are entering a sweeter and smoother economic environment. At the same stage, at the same almost pace, and is not that quite frequent in the economic history of the world, we have a reasonable rate of growth, a reasonable great rate of growth is back at the same time in Europe, in US, and in the emerging market. Have a look back in the history. It is not that frequent. We also meet interest rates so low, and it will last beyond the normalization, which will happen, of course, but they will stay low. The volatility is low. The liquidity is huge. The financial markets, debt capital markets, equity capital markets, the balance sheets of the big banks are not only at disposal, they are at work. So the financial markets have not been so friendly for such a long time. Of course, we always can meet some geopolitical issues which could spoil, disturb this environment, but this environment is already very, very supportive. So it's time to move. It's time to go ahead. It's time to invest. And my last word, I would like to say it in French. Et je voudrais le dire en français parce que je voudrais faire un clin d'œil dans ce temple de la République française, où j'ai d'ailleurs sévi il y a bien longtemps. Le financement des infrastructures, it's a work in progress. Et ça progresse bien. Et ça veut dire que nous sommes en marche vers la bonne direction.
Thank you to all of you. Thank you to our partners. Thank you to the drivers of this work. Michel Cogent from Paris EUROPLACE, who is coordinating the task force, and Pierre Sorbet, who has been very present in the realization of this report and the participation to the group. Thank you to all of you for having participated today. This is only the beginning. This is not the end of the beginning. It's the beginning of a long week, which will be dedicated with various events to all these questions and technical issues of the financing of the infrastructure. But for the moment, possibly the best moment of the day, the cocktail. Have a nice evening.